Hello, what's up, guys? So today I'm going to talk about something that has been trending recently. Lately, there's a lot of talk about this. So people are coming with, like all these ideas, generational wealth and stuff, which is good generally. But the one thing that's not clear enough, like people which are not they are not getting, is when you're talking about generational wealth, all these financial instruments and investments they're talking about, stocks. Stocks have been the talk of the town lately. The dot-com recently listed, there was all talk about shares and all. But generally, there's been a lot of talk about buying shares because now the Lucid app is working. So I haven't tried it out in years. I only tried it out when they launched, and it wasn't working. Like, Blessed Trade, 1 year, it's not 1 month rather, it's not being executed. It's like, yeah, this is not working. So I cannot speak from a first person user perspective when I'm talking about the Lucy app, but I've just seen people talking about the Lucy app, what they're doing and all that. But one thing you need to get in mind is it's not something where you put money in overnight and then you flip it like, oh, you get 100% returns, yeah, just instantly. These are long-term investments, and when I say long-term, like really long-term, and it's not just long-term, because the best way you can save something is if you have got a target in mind. And one of the top things that you're going to spend so much money on is your kids' education. So when you have that baby, you really need to start thinking about how you're going to fund that kid's, school. Because apart from school, I can't think of anything else that you need to spend so much on that child, especially college, university education. University education is not cheap at all. And we are on the topic, there's always bursaries. It's just become like a norm, like everyone is supposed to apply for bursaries in Zambia. Even people of executives are applying for bursaries. Let me not dive into that. But what I'm saying is, you need to have solid goals like that. Give yourself realistic targets, like in 15 years, 10, 15 years, 20 years, I will have a house, I will have houses. One thing that I like to do is look at the realistic charts. So this is the trend line. This is the Luce index, the Saka Stock Exchange or share index. This is everything, all the companies listed on the Luce. So, and I'm using the let's go with the 1 hour chart. So in 1 year, the Luce index has grown from that's 15,438. So this 15,458 kwacha is the accumulative, the sum of the price of all companies, of all the shares listed companies. Like, if one share for Bata, this is just an example. If one share for Bata is selling at 10 kwacha, ShopRite is selling at 20 kwacha, FQML, now they've been delisted, or CEC, one share is selling at, I don't know, 100 kwacha. So each share from each company accumulatively on December 30, this is 5 years ago. This is no, this is 5 years ago. This is December 30, 1 year ago. This is 2024. They were selling at 15,438. So this is the accumulative. All companies, each share from all the companies listed, it was a 15,400. Let's put that in a calculator just to give us a perspective of what we're dealing with here. So 15,421. 421.08. Yeah, we're going to the T. We're trying to find the percentage increase in a year. So this is December 31st last year up to December 16 this year, 2025. So the increase has been, let's get this, copy there. So currently the all share index is at 25,608.34 minus the share index which we started with here, 15,438. So that's what the share index has grown by. Now, if we want to find the percentage increase from last year up to now, we divide that by the beginning of the all share index multiplied by 100. So the all share index for Lusaka Stock Exchange in a year has gone up 66%. So 66% is mind-blowingly great. Lusaka Stock Exchange has been one of the best performing indexes. Now let's do one for 5 years. This is one for 1 year. 66% in 1 year. Let's look at the all share index for 5 years. So this was January 1, 2021 up to December 19, 2025. So the all share index for 5 years, we are currently at 25,608.34 minus what it was January, which is like nearly 5 years there about exactly near about it was 3,912 3,912.33. As you can see, there's a dot 33 there, dot 33. So in 5 years it's gone up by that. You get? In 5 years it's gone up by that. And the percentage increase will be that's 39,12.33. 3912.33 times 100. It's gone up in 5 years. The stock share index has gone up by 554%, 555% if we round off this. So it's gone up by 554% in 5 years. Now let's go back to the yearly one. I want to show you something. We're calculating the yearly one. The yearly one, where's the yearly one? There's a 66 there. So this was the yearly calculation for 66%. Now imagine you invest in the all share index. This is like your broker will advise you on your financial whatever. But realistically speaking, anything above 30 is mind-blowingly great. Anything about 30-40% annual returns, like the percentage increase of your investment per year. So the reason why I'm speaking this is a long-term investment. It's not something, because I mean, if you put 1,000 in, if you had put 1,000 in December last year, now it'll be 1,600. What's 1,600 in a year? It's gone up by more than half, but I mean, like, it's last year and you factor in inflation and all that. It's not much. So there's what's known as a compound calculator. What is that? Give me a sec. Yeah. So the simple calculator is a compound calculator basically. Compound calculator calculates the interest on interest on interest for years. So if you had put 1,000 kwacha, if you were to put 1,000 kwacha, let's say today, you put 1,000 kwacha, and the average, the index is growing. Forget this symbol. The same applies. It's just a symbol. If you have put like 1,000 there, and the percentage increase annual, this is yearly, is, let's be realistic. Yes, in as much as the Lucy went up 66%, his indexes usually go ranging like 20-30, but let's put this at 25% annual, and then it will compound yearly, meaning the percentage you flip, like if you kept that money invested and then you flip it to reinvest it all, for how many years? For the tenure of your kid. How old is your kid going to need these fees? When they're 17, yeah? 18. So let's put 18 years. Are you making any deposits? So we'll do another calculation where if you're making monthly deposit, I think let me start with that. So if you're making deposit, like you've made an initial deposit 1,000 and then each month you're throwing say 1,000 again. Monthly, you're doing this monthly. At the end of each month after it flips. And then you've maintained this for 18 years, each month you're throwing in 1,000 and then you started with 1,000. The amount of money you're going to have after 18 years, if the index, your investment is growing at 25% and is compounding, it's 2,991. This is nearly 3 million. 2,971. So your initial balance was that. You've earned interest. This is like your profit now. From the 25% which is compounding, it's 2.7 million. And then your deposits, your 1,000 deposits on top of the 1,000 amounted to 216,000 216,000. Because here's the thing. See, if you're making deposits of 1,000 times, if you're depositing every month, times 12 months, times 18, that's where the 216 is coming from. You see? So 216 plus that, which is the interest you earned. Now your future value investment is that. So this is a long-term thing, and this is the breakdown of how everything is going down. So month one, 1,000. Month two, you earn an interest of 25% on 1,000. There you go, and then you deposit another 1,000. So on the deposit, sorry, I started with 10,000. Why did you get to 12,000? Oh, these are years. Sorry, these are years. You keep thinking it's, yeah. So these are years. Of course, the deposit will be 12,000 after 1 year. Another 12, 12, 12, 12. So it's accumulated, and then all these 12,000s will come to that. And then this is the interest on top of the 12,000 that you made. It flips. So 25% of 12,000 is that. You get, that's year one. Year two, the interest you've earned. Year three, year four, year five, all the way up to year 18. You know, all this is accumulating. All this is accumulating. And the accrued interest on interest. And it's flipping. And this is the power of compounding, that I want to explain to you. And let's say you put 1,000 without making any further deposits, and it keeps compounding for 18 years. Let's take out that 1,000, this 1,000 that you're depositing monthly, and then just remain with 1,000 which you deposited for 18 years, and it's compounding itself as 25. How much will you have? 55 grand. Isn't 55 grand still kind of enough to pay for the kids' university fees? How much are fees? Because I think you can put a kid through college or university for 2 years with this, and yeah, nearly 2 years. So this is why you see the power of compounding is the additional amounts that you keep it all invested, and yeah, initial investment and joining, yeah, deposit amount, withdrawals. You can even add withdrawals if you're withdrawing, maybe adding yeah. So this is a compound calculator, the beauty of it, and what long-term investments like stocks do. Don't get swayed or don't get carried away thinking you put in. This is gambling. Gambling has ruined people. People thinking they put money in the afternoon, multiplies by 10. No, it doesn't work like that. The real world does not work like that. So basically, that's what I wanted to show you about the power of compounding and just how much money you can make over a period of time. This is how the wealthy take their kids to school. This is how the wealthy pay for everything. It's the power of compounding, stability, And we're only doing at 25%, So 25%. Because initially I showed you, this thing, year to year, year to date, year to year, this thing has grown by 66%. Now to give you at least for 18 years, the average, I just brought it up to, 25. That's more realistic. It could be better than that because we're an emerging market, we're still growing. So it could even be higher than that. Now let's say if we ran the same 66 for 18 years, if we maintain the 66 for 18 years, how much would make was making the deposit for the same 1,000? So that's 1,000. Still start with 1,000. We put 66 is what we've performed this year, annual yearly for 18 years, and then we deposit in the same 1,000 monthly. Just how much money you can make in 18 years if the index grew at 66% average for 18 years compounded. That 226 million. That's a whooping amount of money. Whooping amount of money. Whooping amount of money. You get, so it's the power of compounding, man. And this is what it means, generational wealth, basically. Like, you've said for so long, 18 years. Obviously, Your kids have to pick up something from this. Your discipline for you to be able to be depositing 1,000 for 18 years. Because I mean, like 18 years is how many deposits? Hmm? 18 years times 12. That's 216 times you made the deposits. 216 times 18 years you made those deposits. That's the power of discipline that you need to get there. You see this? It's crazy. Because even 2 million is crazy. 18, you're making 1,000 every month then. So that's the power of compounding, that's the power of the stock market. It's not something you put in money and then you expect like go next year to flip. No. These are long term investments to secure your future. Thank you.